Hello students, admission of a partner lecture 8. In present video, I am going to explain about 10th problem from admission of a partner topic. I am taking this question from Intermediate Telugu Academy, Telangana State 2nd year accountancy textbook. But this video is useful to all commerce students who want to know about admission of a partner topic. First 7 lectures videos links are available in the description box. Even this question is also available in the description box. Let us see the problem first. Vani and Rani are partners sharing profits and losses in the ratio of 1:2 respectively. This 1:2 is known as old profit and loss ratio. Here one number belongs to Vani and 2 number belongs to Rani. So Vani's share is 1/3. How 3 came? 1 plus 2. Rani's share is 2/3. Their balance sheet as on 31st March 2020 was given below. This is called old balance sheet. See the liability side. Bank overdraft 20,000 rupees. Sundry creditors 35,000 rupees. General reserve 15,000. Capitals of Vani and Rani are 30,000 and 60,000. Come to asset side. Cash 18,000 rupees. Sundry debtors 32,000. Stock 40,000, machinery 50,000, buildings 20,000. Two side totals are 1,60,000 rupees. Come to additional information. On 1st April 2020, they admitted money as partner for 1/4 share in the profits of the firm. By seeing this admitted word, we should understand that this is admission related problem. Here, old partners are Vani and Rani. New partner is money. The conditions of admission are as under. A. Money should bring 30,000 rupees as capital and 21,000 rupees as goodwill in cash. B. The assets are valued as follows. Machinery 47,000 rupees. Buildings 25,000 rupees. Stock 38,000 rupees. C. Goodwill is to be retained in the business. D. The new profit sharing ratio of Vani, Rani and money would be 1:2:1 respectively. What he is asking? Give necessary ledger accounts and opening balance sheet. He is not asking journal. Directly ledger accounts we have to prepare and finally we have to show the new balance sheet. Under ledger accounts we have to prepare revaluation account, capitals account of Vani, Rani and money. Next, see the asset side. Cash balance is given and bank balance is not given. Therefore, cash account we have to prepare in this problem. After cash account, goodwill account we should prepare. In ledger, we have to prepare all these accounts. After that, we should show the opening balance sheet. Nothing but new balance sheet. Let us start with the first account under ledger, that is revaluation account. In ledger, first we have to prepare revaluation account. It is a nominal account. Nominal account rule: debit all expenses and losses, credit all incomes and gains, profits. When loss comes in revaluation of assets and liabilities, if asset value is decreasing or liability value is increasing, then loss comes. When profit comes in revaluation of assets and liabilities, if asset value is increasing or if liability value is decreasing, then profit comes. B point is related with revaluation account. The assets are valued as follows. Means these 3 amounts are market values. Old balance sheet values are available here and market values are available here. Machinery market value is 47,000 rupees. In old balance sheet, he is giving that machinery value is 50,000 rupees. In old balance sheet, machinery value is given as 50,000 rupees and its market value is 47,000. Machinery value is reduced by 3,000 rupees. Machine is a one asset. Asset value is reduced. It is a loss. Debit side to machinery account. Book value 50,000 minus market value 47,000. So in revaluation of machinery, this asset value is reduced by 3,000. It is a loss. Next, building's market value is 25,000 rupees and the building's old balance sheet value is 20,000 rupees. In old balance sheet, building's value is given as 20,000 rupees. And in revaluation, old partners came to know that its market price is 25,000 rupees. Market price is increased by 5,000. Buildings is an asset, its value is increased. It is a profit. Credit side, buy buildings account, market value 25,000, old balance sheet value 20,000. Building value is increased by 5,000, which is a profit to us. Next, stock. Market price of stock is 38,000 rupees. And in old balance sheet, stock value is given as 40,000 rupees. Old balance sheet stock value is 40,000 rupees. In revaluation, stock's market value is 38,000 rupees. So market value is decreased by 2,000. It is a loss. Debit side we should show that. To stock account, book value 40,000 minus market value 38,000 rupees. 2,000 is loss. So related with revaluation account, all adjustments we have considered. Finally, we have to find out the profit or loss in revaluation of assets and liabilities. If you observe the totals, two sides we have the same totals. Means in revaluation of assets and liabilities, there is no profit, no loss finally. So how much loss we have? Same profit we have. So finally there is no profit or loss in revaluation of assets and liabilities. Therefore, you need not to distribute any amount to old partners' capital accounts. Suppose you are writing journal entries for this problem. So related with the revaluation account, only two entries you have to write. Because revaluation profit or loss distribution entry we cannot write here. First entry is revaluation account data to machinery account to stock account. Second entry is buildings account data to revaluation account. So revaluation account is completed. Next, capital accounts of all the three partners. Capital accounts of Vani, Rani and Mani. We can prepare these capital accounts by using journal entries or by using shortcut methods. As we are not writing journal entries in this problem, by using shortcut methods, we prepare this account. What is the shortcut method for capital account? Capital account is a personal account. Because instead of writing owner's name, we write capital word. Personal account rule, debit the receiver, credit the giver. Means if partner is the receiver, if partner is receiving some benefit from the firm, that amount debit side we should show. In other words, as partner is received some benefit from the firm, if partner is retiring, partner should return that amount to the firm. So, at the time of retirement, the amounts which a partner should return to firm, we should show on debit side of capital accounts. Credit the giver means if partner is giving any benefit to the firm, that amount appears on credit side of this account. In other words, partner has given some benefit to the firm, no? Suppose partner is retiring, then firm should return that benefit to partner. So at the time of retirement, the amounts which a firm should return to partner, we have to show on credit side of capital accounts. We have to start capital accounts with opening balance. From where we should take this amount? In old balance sheet under liability side, he is giving capitals of Vani and Rani, 30,000 and 60,000. These two amounts we have to write here. Opening balance, credit side we should write. By balance brought down 30,000 and 60,000. New partner's amount is not given in the old balance sheet. Therefore, for new partner, don't write anything. Why we are writing opening balance on credit side of capital account? Capitals, partners brought into the business. Suppose partner is retiring, firm should return that capital amount to them. Therefore, credit side we have to show the opening balance. After this, revaluation account answer we should write. But in revaluation account, there is no profit, no loss. Therefore, no need to write revaluation account answer. After revaluation account, we should observe whether any accumulated profit is given in the question. See the liability side. General reserve 15,000 rupees. This is called accumulated profit. This amount we should transfer to old partners' capital accounts in old profit and loss ratio. Accumulated profit, undistributed profit belongs to old partners. If partner is retiring, firm should pay this accumulated profit amount to partner. Means credit side we have to show that. By general reserve. In old balance sheet liability side, amount is given as 15,000 rupees. This 15,000 belongs to old partners now. They should take this amount in old profit and loss ratio. Old profit and loss ratio is 1:2. 1/3 belongs to Vani. 2/3 is for Rani. So Vani's share is 1/3. 5,000 rupees. In total general reserve amount 15,000. 5,000 belongs to Vani. Then the remaining amount 10,000 belongs to Rani. You need not to calculate Rani's amount. In total 15,000, if 5,000 is subtracted, then the remaining amount 10,000 only now. Next come to capital and goodwill adjustment. A point and C point are related with capital and goodwill. A. Money should bring 30,000 rupees as capital and 21,000 rupees as goodwill in cash. C. Goodwill is to be retained in the business. When new partner money is coming into the firm, she brought 50,000 rupees capital, 20,000 rupees goodwill. To adjust goodwill, there are three methods. Premium method, revaluation method, memorandum revaluation method. When new partner is coming with goodwill and capital, that is premium method. Under premium method, we have to adjust the goodwill in this problem. In premium method, we have three sub-methods. Premium A, goodwill should be paid privately. This sentence is not given in the question. Premium C, goodwill should be withdrawn by the old partners. This sentence is also not given in the question. Then what is left? Premium B, goodwill should be retained in the business. Means what? New partner is bringing capital, goodwill both. This goodwill belongs to old partners now. So to old partners capital accounts, we have to transfer this goodwill in sacrificing ratio. After that, this goodwill amount retains in the business only. In this method, related with goodwill, two entries we have to pass. First entry, money is bringing capital and goodwill into the firm. In old balance sheet asset side, cash is given. Bank balance is not given. Our assumption is directly these two amounts are coming into the firm. As cash is coming into the firm, cash account is one account. This cash is brought by money, no? Therefore, money account is another account. Cash is an asset. All assets come under real account. Money account, person name now, it is a personal account. Real account rule, debit what comes in, credit what goes out. Think from firm's point of view, cash is coming, debit cash account. Personal account rule, debit the receiver, credit the giver. Money is giving amounts to us, she is a giver, we should credit. But owner's name we don't write in the books now. Instead of that, capital word we should write. For more clarity, we have to prefix partner's name also. Then the entry is cash account debtor to money capital account, cash account debtor to money capital account to goodwill account. Why? Because not only capital, new partner is bringing goodwill also. Therefore, we should credit goodwill also. Capital 30,000 rupees, goodwill 21,000 rupees. Total how much cash is coming into the firm? 51,000 rupees. This is first entry. Why goodwill account is credited here? Because new partner is bringing goodwill. This goodwill becomes a liability to the firm. Why? This goodwill amount belongs to old partners. Firm should pay this amount to old partners. So liability shows a credit balance. Therefore, goodwill account is credited. In next entry, we have to transfer this goodwill amount to old partners' capital accounts. When you transfer that goodwill amount, now goodwill account will get closed. To close the goodwill account, we debited goodwill account with the same amount, 21,000 rupees. Once we credited goodwill account with 21,000, again we are debiting goodwill account with the same amount. Then goodwill account will get closed. And why capital accounts are credited? Because capital is a liability. Liability shows a credit balance. Now goodwill amount we are adding to capital. So capital amount increases further. Liability increases further. So liability shows a credit balance and you have to increase it further. Therefore, again you have to credit capital accounts. Now goodwill amount is 21,000 rupees. In which ratio we have to transfer to old partners capital accounts? Not in old ratio. In sacrificing ratio we have to transfer. Related with the sacrificing ratio, remember these 2 points. In question, if new profit and loss ratio is not given, then sacrificing ratio, old ratio, both will be the same. Means in 1:2 ratio, we have to distribute the goodwill. In question, if a new ratio is given, then old ratio we should not take as sacrificing ratio. We have to calculate sacrificing ratio by using this formula. Sacrificing ratio is equal to old ratio minus new ratio. In present problem, new ratio is given in the question 1:2:1. As new ratio is given in the question, we have to compute the sacrificing ratio. Let us see how to calculate sacrificing ratio. Old profit and loss ratio of Vani and Rani is 1:2. And new profit and loss ratio of Vani, Rani and Mani is 1:2:1. So 1 by, add these 3 numbers, 4. 1/4 is Vani's share, 2/4 is Rani's share, and 1/4 is Mani's share. Sacrificing ratio is old ratio minus new ratio, no? So there is the logic behind this formula. In lecture 7 video, I explained clearly about that logic. So video link is available in the description box, and in icon also I am leaving that video link. Let us calculate the sacrificing share of Vani. Vani's old share is 1/3 minus Vani's new share is 1/4. 3 and 4, both we cannot divide with one number. Therefore, LCM is 3 into 4, 12. 3 4s are 12, 4 into 1, 4. Minus 4 3s are 12, 3 into 1, 3 is equal to 1/12. Same thing you have to do for second partner, Rani. Rani's old share is 2/3 minus Rani's new share is 2/4. LCM 12. 3 4s are 12. 4 into 2, 8. 4 3s are 12. 3 into 2, 6. 2/12. For sacrificing ratio, we should consider only numerators. We should not consider denominators. So, sacrificing ratio of Vani and Rani is 1:2. So, in sacrificing ratio 1:2, we have to distribute the goodwill amount to old partners' capital accounts. 21,000 into 1/3, 7,000. 21,000 into 2/3, 14,000. And observe one point. In present problem, sacrificing ratio, old ratio, both are same. Even though we calculated sacrificing ratio by using formula, old ratio only came. But don't think that in every problem it comes like that. It depends on the new ratio which is given in the question. So, when new ratio is given in the question, don't think that no need to calculate sacrificing ratio. Anyhow, old ratio only comes. Let us take the old ratio only. It is not correct. Compulsory, you have to calculate the sacrificing ratio when new ratio is given in the question. Now these two entries we post in capital accounts. See the first entry, money capital is credited. Therefore credit side we have to post this entry. Debit account name we should write by cash account. In money capital we have to post this now. So money capital amount 30,000 rupees. Don't write cash amount 51,000. Money's capital amount we should write because now we are preparing capital account now. Come to the second entry, capital accounts are credited. So this entry also credit side only we should post. Debit account name we should write. In journal entry we debited goodwill account now. Therefore write down goodwill account. Amounts are 7,000 and 14,000. With this, in capital account, everything we have posted. Posting is completed. Next step is balancing. Credit side only we have the amounts. So first you have to calculate the credit totals. Now same amounts you have to show here as balance carried down. In new balance sheet under liability side, as capitals of these three partners, we have to show these three amounts. With this, capital accounts are completed. After capital accounts, we have to prepare cash account or bank account. Now, which account we should prepare? Cash account or bank account?
See the old balance sheet under asset side. Cash balance is given 18,000 rupees and bank balance is not given. Therefore, cash account we have to prepare in this problem.
We have to start this cash account with the opening balance. From where we should take this amount?
In old balance sheet, under asset side, he is giving cash balance 18,000 rupees now. This amount we have to show here.
Debit side we have to show this opening balance. To balance brought down. In question he has given 18,000 rupees now. Write down that amount. 18,000 rupees. Next, this entries we have to post. In first entry, cash account is debited. As cash account we are preparing, this entry on debit side we have to post. What to write in particulars column? Other side, credit side accounts names. To money capital, to goodwill account. Amounts are 30,000, 21,000 rupees. In second entry, cash word is not there now. No need to post that entry. Now, posting is completed. Next, balancing. Debit side total is more. Put the debit side total. Same 69,000 appears as balance carried down. Put the total also. So cash account is completed. In new balance sheet under asset side, as cash balance, this 69,000 rupees we have to show. After cash account, we have to prepare goodwill account. This is goodwill account. First we have to observe in old balance sheet under asset side whether any goodwill amount is given or not.
In old balance sheet under asset side, there is no goodwill amount.
So these two goodwill entries we have to post here. See the first entry, goodwill account is credited. Therefore credit side we have to post. What to write in particulars column? Other side, debit side we wrote cash account now. Write down that. By cash account. Don't write cash amount 51,000. Now we are preparing goodwill account now. Goodwill amount we should write 21,000 rupees. Come to second entry. Goodwill account is debited. So debit side we have to post. What to write? Credit accounts names. To Vani capital account, to Rani capital account. Amounts are 7,000 and 14,000 rupees. Posting is completed. Put the totals. Two sides totals are same. Means in goodwill account there is no balance carried down. Goodwill account is closed. Why? Because in first entry we credited goodwill account with 21,000. In second entry we debited goodwill account with the same amount. If any account is credited and debited with the same amount, then that account will get closed. As goodwill account is closed, in new balance sheet under asset side, we should not show any goodwill amount. So remember, under premium method, B-bit, when goodwill is retained in the business, in new balance sheet asset side, goodwill doesn't appear. With this, ledger is completed. In ledger, we prepared revaluation account, capital accounts of all the three partners, cash account, goodwill account. Now come to new balance sheet. Heading is balance sheet of Vani, Rani and Money as on 31st March 2020. As a new partner's name also we included, this is a new balance sheet.
Based on this old balance sheet and additional information, we have to prepare new balance sheet. First we will see liability side. Bank overdraft 20,000 rupees. Related with the bank overdraft, there is no additional information. Therefore, same amount we should write in new balance sheet under liability side also.
Bank overdraft, there is no adjustment. Therefore, old balance sheet value we have to write in new balance sheet also.
Next come to sundry creditors, 35,000 rupees. Related to sundry creditors, there is no additional information. Therefore, same amount 35,000 we should write in new balance sheet also.
Sundry creditors, as there is no adjustment, 35,000 old balance sheet value in new balance sheet also we have to write.
Next, general reserve 15,000 rupees. We transfer this general reserve balance to old partners capital accounts now. Now there is no balance in general reserve account. Therefore, in new balance sheet, we should not show any general reserve amount. So liability side completed. Not only from balance sheet, we have to observe additional information also. Whether any extra liability is given or not, we have to see. There is no extra liability. Therefore, finally we can write the capitals. Capital of Vani, Rani and money. Don't write these values. Which amounts we should write here?
In capital accounts we got answers now. Balance carried down amounts. These three amounts you have to show here. You can show these three amounts in inner column, total in outer column. Otherwise, directly in outer column also we can show the amounts.
Old balance sheet liability side completed. Now come to asset side. Cash 18,000 rupees. Don't show this amount here. Then which amount we should show here?
In cash account answer is there no balance carried down amount 69,000. This amount we should show here. Cash 69,000 rupees.
Next come to sundry debtors 32,000 rupees. Related to this, there is no additional information. Therefore, same amount appears in new balance sheet also.
Sundry debtors, as there is no adjustment, old balance sheet value 32,000 we should write in new balance sheet also.
Next come to stock 40,000 rupees. Related to stock, there is one adjustment. Adjustment is giving that market price of stock is 38,000 rupees.
Old balance sheet value is 40,000 rupees. And in additional information is giving that market value of this stock is 38,000 rupees. So, stock value is reduced by 2,000 rupees. Market values only we show in new balance sheet, no. So, in inner column, show the old balance sheet value 40,000 rupees minus depreciation 2,000 rupees. Market value in outer column 38,000 rupees.
Next come to machinery. Old balance sheet value 50,000 rupees and market value of machine is 47,000 rupees.
Machinery, old balance sheet value is 50,000 rupees and market value of this machine is 47,000 rupees. So in revaluation, machinery value is reduced by 3,000 rupees. Market value we have to show in new balance sheet. How it comes? In inner column, show the old balance sheet value 50,000 rupees minus depreciation 3,000 rupees. In outer column, market value of machine 47,000 rupees.
Next come to buildings. Old balance sheet value 20,000 and market value of this building is 25,000 rupees.
Buildings. In old balance sheet, building value is given as 20,000 rupees and its market value is 25,000 rupees. Market value we have to show in new balance sheet. How the 25,000 is coming? Show the old balance sheet value in inner column plus appreciation 5,000. In outer column, market value of building 25,000 rupees.
From old balance sheet, we have taken all assets. Even additional information also once we have to see whether any additional asset is given or not. There is no additional asset.
So all liabilities and assets we have taken. Finally, we have to put the totals on two sides. Liability side total is 2,11,000 rupees. Asset side total is also same. Thus, in balance sheet, two sides you should get the same totals. Then only your problem is correct. So this is all about 10th problem from admission of a partner topic. Hope this video is helpful to you. Thank you.